Have you ever heard people talking a lot about how much money they're making off of real estate and flipping houses and owning properties and being a landlord and all this stuff, and they're making gobs of money, becoming millionaires, and you're like, that sounds great, but you know what? I have a hard time just maintaining my rent or mortgage, or you're just starting out with investing and you just don't have a whole bunch of money to go out and buy up a whole bunch of properties and rent them out. Did you know, however, there is a way for you to own real estate and make money off of it without having to actually go and own a property or become a property manager? By the end of this video, you will know how to get that money and how to have real estate and own it and be able to make money off of it without having to fork up $300,000, $500,000, $600,000 in order to buy a property. Before we get into that, however, this being YouTube, as you always know, YouTube algorithm is almighty, it's all powerful, so you can go and hit that like button, the subscribe button, and the notification bell to be notified about videos that I have in the future. So you're probably asking, how do I do this? Well, there's this thing called a REIT, and REITs are real estate investment trusts, and essentially they are publicly traded companies that buy, maintain, and manage real estate properties, anything from hotels, of course, apartment complexes, anywhere up to prisons, office space, strip malls, all of that kind of stuff. These are the companies that own those properties. And what you can do is you can buy stock in those companies, in those trusts, because these companies will probably have multiple different properties that they own, and you can buy into that and earn dividends and, of course, any growth of the company by purchasing them on the stock market. It's basically based off of something called a cigar excise tax. The long and short of that is that in the old days, before 1960, only like really wealthy people could be able to do this kind of stuff. But because of Congress passing this bill in 1960, now anybody who can invest in the stock market can now participate in these trusts that own all of this real estate property. And again, you're not going to have to be the landlord. You're not going to have to go collect rent. You're not going to have to do maintenance. You're not going to have to deal with flooding or repairs or any of that stuff. You basically are just owning a part of the company that is doing all of that itself. There are certain qualifications that you need to have in order to be considered a REIT. Another thing that is people don't really know about this is that by law, a REIT has to give 90% of its profits to its shareholders, which is why you'll see often a lot of REITs will have a very high dividend yield, which means you're going to make a lot of money per share that you own, paid out as dividends, whether it's monthly, which a lot of them are monthly because of the structure of REITs, or quarterly or semi-annually or annually, as all dividends are usually paid. Now, there are a bunch of different kind of REITs. Usually the equity ones are the ones that are most common. Those are the ones that, manage properties like apartment complexes and things like that. They make their money off of collecting the rent and late payments, and they make a profit off of that. And then, of course, like I said, 90% of that goes to the shareholders of the REIT, and they continue that. And that's probably why a lot of rental prices are very high, but that's what you're getting out of that equity REIT that you own. The other one is a mortgage REIT, which is a little bit more complicated because they're making money not only on the mortgage, they're loaning the money out to people who want to buy property, so they're making money back off the interest they're getting from loaning that money to people who want to buy property. And then, of course, there's the hybrid, which is a combination of those two things. And as I said, REITs are pretty much everywhere. If you drive around town, you're probably looking at a bunch of REITs all over in your area. If you see a hospital, that might be part of a REIT, or one of those urgent care centers might be part of a REIT. A strip mall obviously is going to be probably the person who owns that company. If there's a company that owns that strip mall and everybody's paying rent to have a store in a strip mall, that's most likely a REIT. Apartment complexes, obviously, hospitals, as I said, and even prisons, which is a bit shady because the privatized prisons are but yeah, that's even part of them too. Again, your purchasing of whatever kind of stock you want to have is based off of your own ethics, so I am letting you know, though, however, that some of these REITs might not match up with your ethics. So the probably question you're coming up with, well, is this as good as actually owning real estate? Well, yes and no, because there's, benefits and negatives to everything. The benefits of REITs, though, is that over the last couple of years, I think the last 20 years, they've actually outperformed real estate in a lot of ways. But again, your potential for gain, because your potential for risk is a lot lower with a REIT than actually having to, maintain an actual property. people with real estate over the long term are probably going to make a lot more money than the people with REITs, but REITs are, again, the trade-off is you don't have to manage a property. You don't have to come up with the money to buy a property. You don't have to pay the insurance. You don't have to do the maintenance. You don't have to deal with bad tenants or evictions or properties that aren't being rented out. All of the overhead, and basically being in real estate is a full-time job. REITs, you don't have to worry about that. They're investment trusts. You basically buy the trust, you hold on to it, you collect the dividends whenever the dividend is paid to you. You really don't have to do too much with REITs. You just kind of see where they land and make sure that you're not losing money on them, and which is very hard to do these days with REITs. So they are definitely a sound investment, and one of the cornerstones most people will tell you to have in your portfolio if you're starting out investing. Can't really suggest, of course, this is for entertainment purposes only, so I am not a financial advisor. I am not your financial advisor, so you should do your own research before buying anything on the stock market, and I stress that every single time. Don't just do it because I do it. But I can tell you some of the REITs that I have. AG&C is a pretty good one. It's located in my home state here of Maryland, and they were paying a high dividend up until recently when their stock kind of shot up. So they're paying less of a dividend, but you're getting more value out of the stock. There's also N, which is Summit Hotel Properties. It's kind of self-explanatory there. Hotels are another type of REIT that you can own. There's O Realty. O is a really good one. A lot of people have O in their portfolio. You'll see it suggested a lot, and that's because they do pay out pretty decently, and they've had a pretty strong return over the last few years. Health Peak Properties is another good one that I have in my portfolio, and Starwood Properties is one I've had for a long time. I bought it a long time ago before I really understood what I was doing, and it has paid tremendously huge for me. Not only has it had a good return, but the dividend is pretty high and they pay pretty good. So those are the ones that I have. Again, this is not stock advice. I'm just telling you the ones that I have, and maybe something that you can look into, but don't just buy it because I have it. Do your own research. So again, at the end of the day, REITs are a very good way for you if you don't have a lot of money to be able to buy property, to get involved in real estate and get the benefits in real estate without all the headaches. Again, if you do get to the point where you do have a lot more money and you do have the time and you want to be invested in it, you can go and buy houses and buy commercial property if you have the money to do it. Again, that's a big bucks. If you have a lot of money, you can do that. But for the starting out investors, which are going to be most of the people watching this video, who don't have hundreds of thousands or millions of dollars to just go buy a strip mall and just rent it out, or buy a hotel property, a chain of hotels, or buy, some prison system or whatever it is. If you don't have that to buy an apartment complex, this REITs are the way to go, and you can still benefit from a lot of that money that's going around. And remember, again, those companies by law have to pay out 90% of their profits to their investors. So it's really, really something that you should probably look into. But that is my advice here on how to be able to get into real estate without having to lose your shirt or spend a lot of money or actually own any properties. If you found this video informative and you learned anything from it, let your voice be heard in the comment box below. Let me know what you guys think about doing these kind of investments. Do you own any REITs, and how they perform for you? What are any suggestions that you might have for other people to investigate on their own? But until next time, I will see you guys here for more information, news, rumors here on Wrestling with Finance. Have a good day.